Welcome to Short View Trading. It's Monday 5th of September around 9 AM London time. What matters for markets this week and into next week? Indeed, if you're a 1 to 2 week swing trader of equity markets, equity index futures, maybe the S&P 500 equity futures, what should you be focused on? What should you be thinking about? That's what we're going to talk about in this video. Please do subscribe and like, and we'll send you this video for free once or twice a week going forwards. Well, it was a pretty torrid week last week, particularly in US equities. You can see in the chart in front of you now, some of the indices had a really tough week, led by the Philly Sox down over 7% on the week, really beaten up pretty hard. But also, if you look at the small caps, the S&P 600, the mid caps, S&P 400, Dow Jones Transportation, NASDAQ, all sorts of indices were down over 4% over the course of last week over in the States. And then equally, if you whiz round to Europe, you can see the weekly performance wasn't terribly good there, although not as bad as it was in the States, but certainly still pretty poor. The DAX was the standout exception, actually closing up on the week. Italy was broadly flat, but a bunch of other indices were down, typically 0 to 2%, a couple of them down a bit more. If you look at Portugal or Dutch equities, they got hit harder. So the question is, where does that leave us, all that downside? Where are we in terms of global equities? Indeed, our market's trying to find a floor. And in fact, if you look at some of these charts we're putting up in front of you now, you could make that argument. So here's the DAX, candlestick chart of the DAX, not far off a triple bottom. If it holds at these levels, the lows that we saw earlier this year a couple of times, if it holds at these levels, you'd say technically that looks quite interesting. It would be a triple bottom. Generally, those tend to hold once they're in place, and you get some quite good rallies off the back of them. So the DAX is showing that sort of close to forming that triple bottom formation. Equally, if you look in the UK at something like the FTSE 250, you could make similar comments. Or if you looked at the NASDAQ 100, you could argue that it's potentially putting in a reverse head and shoulders. Similarly, as you can see on the S&P 500 in front of you now, that also might be quite close to putting in a reverse head and shoulder, with the head, the June lows, and the first shoulder, I think early May, and then of course potentially another shoulder now. So when we're thinking about markets on a 1 to 2 week basis, we like to look at the technical aspects, but we also like to look at our models and look at the macro and see if it all lines up. So certainly technically things are starting to look interesting, and some of the models are starting to move on to the buy side. These are the short-term 1 to 2 week models, and we're putting one up in front of you now. This is actually a combined short and medium-term risk appetite scoring system that's been great at picking up the swings in this market, and you can see it's back at that sort of buy level. In each and every Daily Rag publication that we publish each day for subscribers, we update all our short-term models, a wide suite of models, and occasionally we introduce some of the medium-term ones as well. But the short-term ones are 1 to 2 week models, medium-term more like 1 to 2 or 1 to 4 months. So we take the models, we marry that up with the technical, and then we think about the macro, and we come to a conclusion as to what we want to do. So for the past 2 weeks, for example, a little over 2 weeks, we've been short this market really since the mid-August highs. You could see that model I put up earlier picked the highs quite nicely, some good sell signals around there. It's now, as you saw, back on buy. So we use all those factors to generate our recommendations on a 1 to 2 week basis for swing trading S&P equity index futures, and we update and publish on this each and every day in the Daily Rag publication. So if you're interested in a free trial to the Daily Rag, the Rag Trader, then please click on the link below and we'll give you a free trial over the course of the next few weeks. All you need to do is put in your name and email address, no credit card details required. So what are we watching today and this week? Well, there's a ton of stuff going on. In particular, all eyes on OPEC meeting later today. It's expected they may well cut the supply levels and start introducing some reduced production amounts to try and tighten the market up a bit. They're concerned about this possible Iranian deal bringing back a lot of oil onto the market, and concerned about demand softening over the next 12-18 months. That's on Monday, that's today. Then added to that, we've got the ECB on Thursday. It's a big meeting and there's discussion of a 75 basis points hike from the ECB, one of the punchiest hikes we will have seen from them on record. Added to that, we've got a press conference from Lagarde after that, and a ton of macro data points over the course of this week, including German factory orders, bits and pieces out of the US, and bits and pieces out of China and other parts of Asia. So that's it from us. That's your morning market hit for Monday, 5th of September. Thank you for listening. Please do subscribe on YouTube to these videos. They're free. Simply click on the subscribe button or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.